Welcome to the Property Nomads Podcast. Welcome to the monthly update with Marc of Wharf Financial. Apologies, first of all, if you hear a really large humming sound in the background. I'm in Mexico City at the moment, and we seem to have the world's loudest refrigerator in our apartment. So apologies in advance for that. Marc, good morning from Mexico, but good afternoon from the UK. How have you been?
Yeah, I've been good, thanks. As usual, very busy. A lot of plans that we're putting into place. Hopefully, people are seeing the Wharf brand out and about when they're looking at properties. So yeah, it's been a really busy time actually.
We're just saying off air, and this is going to be the sort of meat and potatoes of the episode. You're just saying off air that it's possible that lenders interest rates for mortgages might go down. You mentioned that a 10-year fixed at the moment cheaper than a 2-year deal. So explain a bit more if you can.
Yeah, so it's strange. I had a sort of idea this was happening. I think I mentioned something about interest rates on the last episode that I was on, and how the swap and the fixed rates were very similar, and there was a bit of an unusual pattern happening. And at the time, we said inflation was going upwards. And we thought that would probably spike up until the autumn time. Anyway, we have seen rates go up, and the Bank of England base rate's gone up as we've seen. But the weird thing is that the lenders, this isn't all lenders, but quite a few of the lenders, 10-year fix and longer term fixes are cheaper than their shorter term fixes. And usually I've always remembered the shorter term fixes and the variable rates being the cheaper option. But now the longer term rates are actually a little bit cheaper. And that to me suggests that the interest rates may be coming down in the future. Maybe interest rates can't continue rising to tackle inflation, and we're going to see a bit of a dip, or definitely a plateau. So it's an interesting scenario that I haven't really seen before.
No, that is very. I'm just going to use the word weird, because that to me is what it is. Because if we think about this, let's go back to sort of basics. If we think about this pragmatically, let's just say the Bank of England's following the Federal Reserve. I appreciate the Federal Reserve's a different country, USA, etc. But let's just say the Bank of England is following them, because most national banks seem to want to follow the Federal Reserve. Now, they're suggesting over in the US that interest rates might rise to 3% this year, 2022. Now, I'm not saying that that's going to happen, of course, in England with the Bank of England, but even if interest rates do go up, and again, with the currency print and everything that's going on, and I think, the Ukrainian president come out today or last week and said, we need 7 billion euros a month to, survive. And I mean, that's a lot of currency printing basically that needs to happen. So I'm surprised to hear that, because my assumption would be with the currency printing and everything going on, interest rates will probably have to increase anyway, because you made that prediction at the start of the year that would happen. So if that happens, then to me, the mortgage rates would increase. So I'm as you could tell, I'm slightly baffled by that. And it sounds like you're a bit baffled by this as well. It doesn't seem to make sense.
Yeah, it was something that Knight Frank actually mentioned, and we put it out on our weekly newsletter. And if people want a copy of that each week, just get in touch with us. And yeah, it only really came on my radar because one of my customers was asking me about it. So I thought I'd do a bit more research into it and found this report. And it was quite a different set of opinions to most people in the market. So I think we just need to watch this space and see what happens. Because like you said, inflation going up, the way to combat that is increasing the interest rates. But if you think about it, the cost of everything's gone up so much. I know my electricity bill has just jumped up. To increase your mortgage as well as that, it's going to be really difficult for people. So maybe there's that's going on in, that thought that's going on in somebody in one of the economists, heads, and they think that bringing the interest rates down is going to be the right way. But it's all to do with the swap and the fixed rate and how they correlate. So that's what, if people are looking to learn a bit more about it, I would suggest having a look at the swap rates and comparing them to the fixed rate. And you should be able to get a good insight into it.
And as we always say when we do these, monthly sort of segments, monthly updates, if you listen to this and you're looking at, you're doing your mortgages at the moment or you're refinancing, etc., please do reach out to Marc and the team at Wharf Financial. They know what they're doing. They're very, very good at what they do, and as you can tell from the podcast, very intelligent people. So do reach out to them. I guess every investor is different, and we don't want to beat the same drum. Before we talk about high street news, we don't want to beat the same drum. But I imagine, if I think about our portfolio at the moment, unless we buy something, we don't have any refinances. Actually, we've got one coming up. We don't really have anything coming up for the next couple of years. And then even then, we're in that position where we've sort of followed that VRR model. So we would probably look to fix for as long a period as possible, just to have that, that security of, what's coming out each month. I think that was just a bit of waffle. I don't really have a question for that. I guess every investor is going to be different, and that's why we say speak to broker, have a chat, work out what's best.
I've got a comment upon your waffle, if you would like. I would say, when I fix in for a long time, it always gets to the point where a couple of years down the line, I'm always getting a bit itchy and just thinking I could use some of that equity because house prices are going up. And I think, I wish I didn't fix in. So it's a weird one. At the time, you always think, fix in, be sensible, keep on the cheap rate. But then I get a little bit restless and want to start investing again, and think, I wish I did put that fixed rate in place. It's a difficult one because nobody knows what's going to happen. That's the thing, and the people who know the least are the economists. So it's crazy. You just it's almost like a guess every time because nobody knows. If you said this time last year, COVID, people would have sort of almost forgotten every restriction and everything that was going on now, and there'll be a war across the world almost. You would have been like, well, that's probably not going to happen. And it is. So expect the unexpected.
Yeah, absolutely. Hence why we both sound probably a little bit flabbergasted about what we were just talking about as well, because you are right, it doesn't make sense. And I do like that comment about economists. It's so true. Anyway, moving on, some high street news. And again, this is a bit forecasty, but I think people that are listening to this could probably see this happening as well. There's been a few reports out recently that, the high street's suffering, Amazon's taken over the world, et cetera, et cetera, et cetera. People are becoming lazier, delivery, blah, 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 blah. But you've seen a couple of studies and reports and speaking to people that suggest that actually this might start happening on an even grander scale. So from a property point of view, that's going to create even more opportunities. Obviously, there's been a lot of changes with like Class MA, Class E, prior approval, permitted development, that sort of stuff. There could be a lot of opportunities coming up there, couldn't there, from what I understand? Yeah,
definitely. And I saw the reports, and again, after that, I did my research, had a looked into it and thought, what's actually driving the failure of the high street and the shops in the high street? And long term, we know that people are tending to shop online, all that sort of things. They go to the high street more for an experience, i.e. going to Nando's in the cinema. But what is driving the potential upturn in retail failures? And I think it's the government schemes that were put in place through COVID, where there was furlough and there was the CBIL scheme, all stuff like that. And they've all come to an end really now. The effects of CBILs, people are having to refinance away. That's going to be on higher interest rates. So they're going to be paying interest now. They're going to have a fee to pay. It's going to tip some of the retailers over the edge. So I think it's something to think about. When will that happen? And if you think about the CBILs scheme, when that ended, that was, sometime last year, and they, on the CBIL scheme, you got a year's interest free and a year and fee free. You think that interest free is coming to an end now. So it's very important to keep your eyes and ears open for opportunities, because I think there will be some coming up. I do think there will be opportunities for commercial to residential as well. We're seeing new people come to us and ask us about that all the time. And a little bit of a sidestep here, but I went away a couple of weeks ago, and on the way back, I watched what was it called, Wall Street, and it was Mark Wahlberg's documentary on his entrepreneurship and how he sets up all these things. And what struck me about it, he's a pretty impressive guy. He gets up at like 2 a.m. and then doesn't go to bed till 1 a.m. So he sleeps for about an hour, it seems. But he's an impressive guy. But he just sets up businesses and creates successful businesses. And if he's creating more than one, and obviously he's got a team around it, but what struck me was there's so much opportunity, not just in property, but to be an entrepreneur as well. There really is no barriers to entry anymore, and you can do anything. You can set up whatever business, whether it's property, I don't know, fashion, whatever it is, because the way the economy and the market goes now. And I just think people need to be wise to the fact that there's a big wide world out there. Salaried jobs aren't the be all and end all. There's money to be made, and you can do it yourself.
Yeah, couldn't agree more with that. We obviously property-based podcast, so that's we'd advocate property as a pillar of wealth, so to speak. But you and I have chatted before about other things you can do that could be closely related. You can look at crypto. I mean, I understand there's a lot going on there at the moment. Is it an investment? Is it not an investment? That's not for this podcast, not for this episode. We mentioned before about metals, gold, silver, especially at the moment, given the cycle and what's going on. Other commodities as well. So there's, yeah, you're absolutely right. There are a lot of opportunities. And then when you've got social media platforms, your TikToks, YouTubes, etc. It's very easy to sit here and say, oh, it's so easy. But then it's just, that in your head.
Yeah. And one thing I should mention, there's been a spate of mortgage brokerages being bought up by bigger companies. So the latest one to have been bought is SPF, who were originally Savills Private Finance, with a mortgage broking arm of Savills back in the day. It went independent quite a while ago. But they were bought by Howdens, who are not the kitchen manufacturer. It's the insurance company, and they've bought SPF for a big number, a real big number, and it just shows property is alive and kicking. And there's some big companies out there looking at the market and supporting it and really investing in it. So it doesn't look like property investing is going anywhere. And like we were saying, there's so much opportunity in property or elsewhere in different markets to invest. And you do the research, you put the time and effort in, you can make things a success.
Absolutely. And hopefully, episodes like this, content like this, as you say, Mark, do your homework, get listening. I appreciate that people that are listening to this episode, you're going to have people that are very experienced, people that might not have bought their first property yet. But as with anything, educate yourself. There's a lot of great content, both, content that you can pay for, content that's free. There's a lot of great content out there. Speak to, people like yourself, Mark, who, again, great brokerage, what you're doing, you take a lot of pride in what you do as well behind the scenes, and, go from there. All I would say, and I've said this before, a broken clock is correct twice a day, is there will have to be a correction at some point. I think it'll be a nasty one for a lot of people, but again, that's personal opinion. Other people may not agree, and that's fine. But I think there will be a nasty correction at some point. I do think, again, best wishes to the people of Ukraine and Eastern Europe. I do think that what's going on there is covering up a lot of other cracks that people like you and I might not be able to see at the moment. So how long that will continue, I don't know. But
yeah, I think you're right there. I think there is a blanket across the media at the moment hiding all the bad news. So I think, there could be something. But if you think about 2008, I remember I was talking to somebody and they were trying to invest in shares, and they said, what shares should I invest in? And I'm not an economist or anything like that, or a financial advisor. Like, it's just a friend in the pub and we're having a chat, and I was like, oh, well, you never go wrong with the banks, do you? And then that's why you don't listen to me about investment advice. Yeah, RBS has been around for ages. It's a great old bank, and with NatWest Bulk on it, that won't ever, nothing will happen to that. But the thing is, one person at the top and a culture that is ingrained into the company can make things go rotten very quickly. So it's interesting. And I'm sorry, I'm just going to waffle you back now. Thinking about the bigger banks, we're talking to all the high streets, and I would say their appetite has become even more conservative. The only one that actually is doing a bit more than they were is NatWest for me. But some of the others, you just can't get deals away with them. You just can't do anything. It's it's an interesting time. Interesting.
And yet the 10-year fixes are still lower than 2-year.
It's because their stress tests are so high. You just can't do anything. And the high streets will stress test on a capital and interest basis, whereas the challenger and the fintechs will do it on an interest-only basis. So it's so much easier getting the challenger bank or the fintech lender to do it, and they'll charge you about 0.5% more, something like that, not much more. And you just get a lot bigger loan, which is a bit more fit for investors' purposes.
Well, yeah, especially as then given inflation at the moment, the inflation is going to erode away the debt, and the cost of the debt anyway. But that's probably a different conversation for a different time. People should, in my opinion, be already aware of things like that. Mark, just so we've got a quick summary here. So we're saying that at the moment, 10-year fixes, from what you've seen, they're actually slightly lower than 2-year fixes. We both sort of agree that that's a bit strange given everything that's going on, but you've outlined reasons as to why that might be, so that is what it is. And apart from yourself and myself having a bit of respective waffle, the other thing that we've looked at from information is that, again, a lot more opportunity possibly coming up on the high street because of, you mentioned with fintech stuff and loans being handed back, all that sort of stuff. And I completely forgot the last point I was going to make. Going back to sales prices briefly, and again from your newsletter at night, Frank, it seems to be that I say usual stuff. House prices seem to keep going up, but also the prices that vendors are getting for their homes seem to be going still above and beyond the asking price. So again, from my opinion, it doesn't surprise me, but also it just shows that that supply and demand. There will never be an easy fix for the supply and demand of housing in this country. It's like people want to very quickly change oil prices, for example. It's like you can change the supply of oil, that's fine, but it's not as easy as a click of your finger and it's done the following day. There is a bit of a process there. That's what I've taken from this. Anything else to add your end?
No, I don't think so. There's one thing off topic. We're doing a charity cycle across the length of Portugal. So we're going from the north down to the south. We're doing 500 miles in 5 days, starting in June, I can't remember, 13th, I think, raising money for child aid for the kids in Eastern Europe. So if anybody wants to find out about that or donate anything to the cause, please do. That's sponsored by Wharf Financial and also followed by Avamore Capital, who have been so good in helping us organise and raise the funds.
And links to that will be in the show notes. as per usual. Bit of housekeeping before we sign off. Appreciate that this is probably going to be labelled as an April call because we are recording this at the end of April, but the episode will go out on May bank holiday, and there will be another episode in May at the end of May. So, Marc, thanks very much for your time. Great stuff on the charity cycling. I will put links into the show notes and catch you at the end of May.
Great. Thank you very much.